for Monday, August 30th. First off, found this very interesting. Pulled up the Bitcoin chart here. This is on the weekly. And what I did here was I wanted to see exactly how long the last bull cycle was. We got it about 840 days from the time that it fell off and really started to make its move upwards. And when I overlaid this to where we're currently at, literally 840 days, same time frame, lines up literally just like a day or two or a week or so right before the Coinbase IPO, which would have been the top of this market. So I thought it was very interesting. And this green line over here, if we do a similar move, I don't know if it's possible or not, but $320,000 does come up for Bitcoin if we mimic that 2016 or that late 2017 bull run over here. So potentially, I don't know, 300,000 be pretty crazy, 250,000 even. I just thought that these numbers were interesting as far as the days go, lining literally right up with the Coinbase IPO from the last bull cycle. And who knows if we're going to get that high 320,000 if we do go super parabolic. I don't know. I'm starting to change my mind a little bit on that $85,000 price target. Could we go even higher and break 100K and really send this thing up before the end of the year is over or into next year? So just kind of want to put this in front of your eyes. Kind of crazy to think about. I don't know how accurate this stuff is going to be, but I did find it pretty interesting that the days, 840 days to a T, takes us right to the Coinbase IPO from when we started to move north here. So next up, we got 3 beginner crypto trading strategies worth exploring. I know that we may have some beginners on the channel, and I thought this article was worth noting here, mainly the last strategy that they gave. We'll go through all of them, but it says crypto assets are a high-risk investment, and trading them without a plan in place can often lead to a loss of invested capital. While most analysts would agree there is no perfect trading strategy, there are 3 well-known methods that are well suited to beginner traders. So keep in mind, if you guys are following anything and you're a beginner trader, chances are a majority of other people are doing the same thing. So the first thing that they mention, dollar cost averaging, I think is a great tool. For me, the people that I know that have made a lot of money in these markets, number one, they did dollar cost average in, so you don't buy all on one day, because the worst thing that could happen to you is you buy something and then your asset drops 50%. It's a pretty hard pill to swallow, especially if you're a new trader. So dollar cost averaging in and dollar cost averaging on the way out, I think, is a great strategy. You know, spread out your buys, only use money that you can afford to lose, and then that way you can get an average price into the market. And then when you're selling into those big green candles, as we recommend doing, not financial advice, you don't want to sell all on one day, because also worst thing that can happen is you sell your whole stash and the thing goes up 5 or 6x higher. I have made that mistake before, so do not do that. Never sell it all, but do not take any profit as well. Next thing that they mentioned here, the golden cross and death cross. I'm going to ignore this because I've seen it go both ways. People say that when you get this cross of the 50-day moving average and the 200, it's supposed to go one way or the other. I've seen fake outs take place on both the golden cross and the death cross. Keep in mind that a lot of other traders are looking at the same data, so it's almost like a self-fulfilling prophecy. I don't use a ton of indicators on my charts either. I think keeping it simple is a great strategy, but ignore the golden death cross, and I should say the convergence golden death cross and the divergence death cross. Both cannot be completely 100% reliable. Just like any indicator, it is easy to get faked out. And then the third thing here, the RSI divergence crypto trading strategy. I'm going to take back my words here. I did like the first thing that was mentioned, the dollar cost averaging, even though I have the RSI on my charts, and it can be a decent indicator to use in conjunction with the others. I think the whole point of trading and looking at indicators is to get a bunch of different confluences that take place together to really make an educated guess as to where the market is going to go, because at the end of the day, I've seen these markets whipsaw people back and forth so quick, liquidate people on one end, take it back the opposite way, only to go down even further than where it started from, and really just confuse the retail traders. If I have one piece of advice to give, and this is what we preach on the channel all the time, to really make crazy epic gains, buy assets that are 90% plus off of their previous all-time high in the bear markets when it's the scariest time to buy, because that is when the people in the know are purchasing their assets. When the average retail trader is completely exhausted, they've lost 90% of their money, they just want to get out because they think it's going to zero, that is when you scoop up. That is the least amount of risk possible on the table, is to buy when it is the scariest, to buy when there's blood in the streets, especially if it's your own. That is a common quote for trading, and that is what you guys need to do to really get exponential gains, is get into the suppressed assets that are 90% off, let those assets mature, and then take your profits all the way up, start exiting, at previous all-time highs, and then set out your targets for the next wave up. So you are always pulling profits. You're never exiting completely out of one asset all at one time. And you can ensure that you'll make a ton of money, because guess what? The people that I know that try to trade these markets mathematically do worse than people that buy and hold through the bull cycle. Doesn't mean that you should hold the entire time for 4 to 5 years unless that's your plan, which is totally fine. I have friends that have done that have held on for 6, 7, 8 years and are crushing it right now. But they would have had a lot more money had they taken profit during those run-ups, because theoretically speaking, we're roughly on 4-year cycles or so. And so you want to capitalize, take a ton of money out of those bull cycles, and then save some of that for a rainy day, a year or a year and a half later down the road, and go ahead and buy those same assets back up at a 90% discount. As mentioned, we don't really care what it is. Any of your favorite assets will be subject to 80 to 90% corrections. That includes Bitcoin, Ethereum, XRP, even our favorite ones. A lot of these assets will fall tremendously going into the bear market, and that's when people are going to get wiped out. They're going to lose all their capital. So that is our advice, but not financial advice. And on to the next one. If you guys are looking to get an idea of where our heads are at, sign up for our Encrypted Capital newsletter. We have a free version and a paid version. We do have a daily brief, which is free, going over news and overall market sentiment, as well as trade updates. We are very, very active on here, as you can see, multiple posts each day, and it's a great way to support the channel if you guys choose to do so. If you like the content, sign up for the newsletter. We got an awesome Discord going on as well. If you guys want to be part of the conversation, I will leave a link in the description below. And next up, we got the hottest crypto coins are the Bitcoin and Ether alternatives coming from Bloomberg, which, crazy enough, I actually agree with. Bitcoin and Ether alternatives are going to be your best way to make crazy and epic gains. And it says FOMO remains alive and well in the cryptocurrency world, with lesser known tokens outperforming again in the wake of recent rallies staged by industry leaders Bitcoin and Ether. So we saw that Cardano has doubled this month, and that has become the third largest digital asset, replacing XRP as being the dominant third place asset. That has fallen to number 7, if I recall correctly. And when we saw that happen last time in the bull market, last bull cycle, guess what happened? XRP caught right back up and went parabolic, claiming its space as number 3, and it may have even taken number 2. I can't recall if it ever passed Ethereum. It may have briefly. I would like to go do a fact check on that. If you guys know about that, go check it out in the comments below. But good to note that, crazily enough, Bloomberg is putting out that you should put your money in other assets besides Bitcoin and Ethereum. Couldn't agree more. And next up, speaking of Ripple, Ripple files a motion to expose XRP holdings of SEC employees. Very, very interesting turn of events here in the Ripple case. It says the court has reportedly given the U.S. SEC until September 3rd to respond to Ripple's motion to compel the authority to provide data on its employees' XRP holdings. be curious to note if you got Gary Gensler over there stockpiling millions worth of XRP. And it says that James Fallon, an attorney closely following the SEC's case against Ripple, shared a new motion document seeking to bring clarity to whether the SEC permitted its own employees to trade XRP, which, as per the regulator's allegations, is an unregistered security. So, are the SEC a bunch of hypocrites? I think we've seen that throughout history. They definitely are. It'll be very, very interesting to see what plays out of this. Could we get a settlement here in the next few days? I don't know. I think a settlement, I think it has to be definitive. I think it has to be definitive that XRP, Ripple, they are not securities. It can't just be a settlement out of court. I feel that leaves a lot of gray area for this asset if that does go that route. So we'll see. But be curious to note if they end up getting some sort of progression here, positive progression for XRP and Ripple if they do end up releasing this information here. And also got billionaire John Paulson calls cryptocurrencies worthless, but says he won't short them. He says he wouldn't recommend anyone invest in cryptocurrencies. Either he's sad he missed out or him and his billionaire buddies are all in on the game. Billionaire hedge fund manager John Paulson remains strongly opposed to investing in cryptocurrencies, calling them a bubble and saying that regardless of where they're trading today, cryptocurrencies will eventually prove to be worthless. But yet, in my next news story, we have China using their central bank digital currency of the yuan. So it appears to me that since the 9 banks that we talk about time and time again on this channel that funded the R3 core to blockchain tend to think differently, since they have made XDC the chosen one. It says once the exuberance wears off or liquidity dries up, they will go to zero. Have not seen assets go to zero yet in multiple bull cycles, so I don't think it takes that much wherewithal to go ahead and look at a chart and see that we have not gone to zero even after 90% pullbacks and even more in some other assets. It says Paulson said that in an interview with Bloomberg Wealth. You wouldn't recommend anyone invest in cryptocurrencies, yet we just saw Cardano double in a month. Who wouldn't take 100% gains in 30 days? We've also seen that in our newsletter. You guys definitely want to sign up for that. We've put out some assets that have gone absolutely crazy in our time doing this. Definitely don't want to sleep on that. So it says when asked why he doesn't short cryptocurrencies, however, Paulson said prices are simply too volatile to short cryptos effectively. They are very, very volatile. You have to have can't be trading on margin, because if the market goes, let's say 10 or 15% one way or the other, which we definitely see in a 24-hour period, it'll absolutely liquidate you. But what I've been doing is cross margin longs on KuCoin. You don't need to do crazy leverage. You do low leverage cross margin longs where, let's say I will have, let's say I have $10,000 worth of Bitcoin and I am betting that XRP is going to go higher. I may only do a 2x leverage trade, which means that all of my Bitcoin, that $10,000 would end up getting liquidated if the market dropped and crashed like crazy, if something insane happened. But it's a safer way to trade because now I can acquire low amounts of these altcoins with a very, very low amount of risk, and I can let those assets mature, and I'm not worried about a 15% correction absolutely wiping out everything I have. The margins are so low, the margin trade is so low, I should say, that the market would really have to move violently at a very, very high percentage drop for me to get liquidated. That is a good way, in my opinion, to go ahead and use leverage. But like I said, you're using such a small amount of leverage. I'm not even using a full 10x on that cross margin long, and it still lets me accumulate these assets. And I'm using my assets that I already have in my KuCoin account as collateral to ensure that, as long as nothing happens to the exchange, I will still have my money most likely. Definitely a good way to put the odds in your favor. Low leverage, cross margin longs. Look into it. So let's see. Paulson also says he's a hedge fund manager who CoinDesk says that he's a hedge fund manager who made a fortune betting against the U.S. housing market roughly 14 years ago. So this guy is prone to shorting. And if you guys go back and look at the charts on BTC when they opened up the option of basically betting against Bitcoin. Back in the day, when those contracts were entered, that was the top of the Bitcoin bubble at 20K. So once they were allowed to short Bitcoin and everybody thought it was going up and the hype train kept pumping and pumping out that Bitcoin was going to 100K, as soon as big institutions were able to go ahead and short Bitcoin, they did, and that was when the bear market started. So always want to do the exact opposite of the herd, have the contrarian mindset. That's why we preach that stuff, because what you're seeing in the public eye 90% of the time is manipulated to make you think a certain way, and they're going to go ahead and take their trades the exact opposite way. So also, we got China, as we mentioned, to build a global clearing network for mobile payments using digital yuan. It says the RMB internationalization is inevitable, wrote People's Daily. So China's central bank digital currency has been in trial since the spring of 2020 and has so far been used in at least $5 billion worth of transactions, including some cross-border payments. So pretty crazy to see that $5 billion have already been transacted here over in China. I don't think it's going to be long before we start to see that in the US. And if I had to take a wild guess, we know that Coinbase and Circle have teamed up, and Circle being funded by Goldman Sachs. They use the USDC currency that was created by both Circle and Coinbase, and in part Goldman Sachs. It'd be interesting to see if they end up using USDC as some sort of central bank digital currency. Would not be surprised one bit if that takes place here. Also wanted to know, we got Polkadot's Parallel Finance raises $22 million at $150 million valuation. The startup wants to become a DeFi brand across multiple blockchains. And so I wanted to point out that Polkadot, if you guys know who the founders are of Polkadot, and we saw that Peter Thiel was talking about Bitcoin and his company, and they're going to start utilizing it and putting it to work, whatever. You know, Peter Thiel, the creator of PayPal, now all of a sudden coming into Bitcoin, which would be right up his alley. I find it hard to believe that he hasn't been in this space for a long time, just like his boy Elon. But talking about Peter Thiel, so the creator of Polkadot was Habermeer, I want to say, is a Thiel Fellow. So a Thiel Fellow, meaning that he was part of Peter Thiel's incubator, basically. You could technically say that Thiel has direct ties to Polkadot, which means that, in my opinion, there's a very high chance that this project will most likely not fail. If we go ahead and take a look at the all-time chart here on CoinMarketCap, we can see how it's starting to move, starting to climb up here a little bit. And who knows, could this be one of the ones that actually gets sent to the moon? Most likely, I'd have to think if you got Thiel and all his billionaire boys involved in the asset, most likely this thing will skyrocket. And interesting to know, like I said, Habermeer is a Thiel Fellow, and there's a good chance that there's some very, very deep pockets behind Polkadot, which I think is the stupidest name ever, or one of them, aside from Cumrocket. But Cumrocket's still a pretty good name if you ask me. But yeah, Polkadot, shitty name, but got some deep pockets behind it. And last but not least, my favorite tool in the crypto space, Mark Cuban, selling shitty Dallas Mavericks gear, and they're accepting dog shit coin. So in case you're stupid enough to have dog shit coin, unless you got in at like 0.0003 cents, you probably should have sold by now on that Elon Musk SNL debut if you were smart, which we also put out in our newsletter. Shameless plug. But yeah, if you have the dog shit coin, good to know that you can now go buy shitty, ugly looking Dallas Mavericks merchandise. So that being said, I think that will wrap it up for this edition of the Encrypted Capital Recap. If you guys like what you heard, please drop us a like, comment, and subscribe. Get this stuff out there. We did some pretty good videos, I must say, over the last week or so. So go check those out. And like I said, if you guys want to support the channel, great way to do so. Sign up for the newsletter. Like I said, we got the free version if you guys don't want to pay for it. But if you guys want to support the channel, check out the paid version. We definitely got some really great gems in there. And so we will catch you all in the next video.